Hi, everybody. This is Roy Osorio with Douglas Elliman Real Estate of Roy's Open Houses. Welcome to January 2022 monthly market report. For the next 20 minutes or so, we're going to be talking a little bit about the most important things that are happening in real estate right now and how that's affecting you, both a seller and or a buyer in today's market. I'm going to sort of try to define reality in the next 20 minutes and also give you a template for what to expect in the coming market. I believe that some of the best real estate advisors in today's market are somehow finding a way to create certainty for their clients. Certainty. And the only way you can create certainty is to know exactly what's happening. So that's my goal over the next 20 minutes. Let's just jump right in. I'm going to call this segment today, To Be Certain or Not. Stand by. Welcome back, folks. So first quote is from Bill McBride from Calculated Risk. It is possible that rising mortgage rates will slow the housing market, or the Fed might raise rates sooner than expected due to the recent pickup in inflation. But I believe one thing is certain. Inventory will tell the tale. Inventory will tell the tale. And you know, that's probably the most, truest statement. Is there such a word as truest? Yes. There's so much speculation in the market right now. You know, what's going to happen to mortgage rates? What's going to happen with the Fed? What's inflation doing? Let's add to that coronavirus and the Omicron stuff, and your brain will blow up. So much out there speculating. We're going to try to determine what is the impact right now in the real estate market as we speak. I mean, no doubt we can guarantee inventory will be the market indicator this year. I mean, it's that every year in real estate anyway, but no doubt this year it will certainly be that. As we define reality, here's the reality. The bad news. Listings are at record lows, no doubt. Over the last couple of years, if one thing has been true is that low rates, people's definition of home, people's desire to own a home, has kind of depleted housing supply all across the country. The reasons are different. The causality is different. We've covered those extensively. But the bottom line is this: listings are at a record low. If we start to look at that, let's look at the graphic representation of this. This is a look at housing inventory year over year. So what Realtor.com does here is they look at where we were in December 2020 in contrast to December 2021. So just a month ago, the most recent data. The national average you see kind of at the middle of the bottom of this slide, almost 27% down year over year. 27% down year over year. And you can look across the country, Idaho kind of leading the way, so to speak, at 55% down there. But most of the country in this light brown color, somewhere between 15 and 30% down. But no doubt, a significant lack of inventory across the country. Now, the truth is right now that in real estate, we're not able to reach our market potential because we cannot sell what we don't have. If we had plenty of inventory, you'd probably see more homes to sell in this country by a lot, okay? But we don't have the homes to sell. So if you're a buyer wondering what's going on, or a seller and frustrated as to where things are at, this is really the reality across the country. It's not just here or there, it's across the country. I'm not saying it's not possible to buy a home or anything is impossible by that, but it definitely defines reality, and that's what we're trying to look at right now, is how do we define the reality of today's marketplace. You know, if we look at this overview going all the way back to 2019, this is a look at months of inventory in residential real estate, starting all the way back in January of 2019. I mean, if you think of it, January of 2019, we're here already. We're in the same spot almost based on this. 4 months on an average, let's call it, in supply. The start to dip down in 2020 and spike up during the lockdown in April and May of 2020. And then sort of depleting since then. The record low of December and January last year of under 2 months supply. And we're right near that as well right now, by the way. So, you know, inventory sort of edged lower each year as we've gone through the last several years. That's the bottom line when it comes to inventory. We don't have what we need. We can't sell what we don't have to sell. Now, we will not reach the market potential in real estate this year if we don't have that inventory. That's a given. Now, you know, the question that we get certainly a lot is this: will this wave of coronavirus affect inventory? Will it affect the real estate plans of buyers and homeowners? Now, it could affect people delaying putting their home on the market. I don't think that's a long-term effect, though, by any stretch of the imagination. But I think over the next weeks, maybe in the month of January, through the month of January, it could affect people. And it did, by the way. I'm not saying that it will, but I'm saying it definitely could and has. Now let's talk for a minute about buyer activity. So we talked about sellers, about listings and such, and how many we don't have. Now what's happening with buyers? Just like I talked about, the effect of the pandemic potentially on sellers, one thing I can tell you definitively is it's not pushing buyers back. It's not slowing buyer demand. So the picture that I would paint is lack of inventory, but buyers are continuing to come into the market. So let's define that. Showings still strong, greater than last November. So basically the headline shows what we're trying to compare, or showing time, because as you know, we've used showing time to measure activity. We know that on the front end, it's a leading indicator of activity. Now, if people aren't scheduling showings, then those ultimately don't turn into contracts and ultimately sold deals. But we look at this past November of 2021 as compared to last November of 2020. We are ahead in showings. Stronger activity than last November. It's very interesting that we see that strong activity continue to happen from buyers across the country. So, I think this speaks really to maybe those that wonder, okay, where's the health of the real estate market? Is it slowing down? It's not slowing down. As a matter of fact, showings still continue to crush pre-pandemic numbers. Look at these. Let's look at the showings over the last Novembers coming from showing time. You see 2017, 2018, 2019. I always call those the last 3 normal years. Certainly maybe in the world, if not in real estate. 2020, we see the shoot up there in activity. And we know very well that was pretty much all that was all about. And certainly in 2021, we're seeing even more of that. So activity remaining strong coming into the holiday season that we just wrapped up. So as you can tell, those were all the showings, 175 to 156.3. Buyer demand is there. Michael Lane says it best this way. He's the president of Showing Time. Showings traditionally lag during the holiday season, but the data we're seeing tells us that buyer demand remains strong. The fact that every region showed a year-over-year increase indicates that buyers are undeterred, and it speaks to their desire to keep searching for their next home. No doubt buyers out there are in force. Many of them motivated by a number of different things right now. It could be the impetus of rising rates and saying we want to do something before they rise. It could be a scenario where they're saying, hey, something's changed in our life and our work, that's caused different needs. But no doubt the buyers are out there, and they're out there in force. Now, ultimately, we talked a lot about this leading indicator of showings. Those are turning into deals, pending deals. Sales are higher than pre-pandemic numbers as well. Off a little bit from 2020, but again, you go back to the normal years there in the gray area, we see pre-pandemic, the measure of that from NAR. Last year, 2 years ago, 2020, that reading read 125.8 pending sales. 2021, and in 2021, 122.4 from 2020. So again, we're moving in the right direction. All we need is more listings. Now, in a few minutes into this market report, you're probably going, Roy, come on, we already know this. We already know that we're short on inventory. We've got plenty of buyers. I know all that out there. So what is the opportunity? Okay? So let me tell you what that opportunity is really quick. Actually, let me go back really quick here for a moment. The opportunity right now to look at, it's in home equity by far. Now, what I'm going to do in the next couple of minutes is I'm going to break down the current situation with home equity, kind of wrapping up this past year. The latest numbers we have in this past year state that the opportunity is in home equity. It may be driving a lot of buyers saying, hey, we've got this equity. Do we harness that and move up? Maybe if we're retiring, move down and downsize and use that sort of to build a little bit of a nest egg with. Number of different things that people are doing with home equity, but no doubt it is there. No doubt people are thinking and actively considering using that home equity to do something different with housing. I can tell you right now that a perfect example of what happened just recently with one of my clients is he bought a property about 6 months ago. It has already developed about 7 to 10% worth of equity in just those 6 months alone. Brand new property. He needed money to go buy an investment property. So he literally pulls out a home equity, okay, to grab that money and go purchase this investment property that is giving him anywhere between $18,000 to $20,000 a month in income, rental income, in a nice spot in San Clemente. Okay, this is whilst he's only paying about $7,500 in total mortgage payment, including HOA. $7,500, $18,000 in rent. Do you think that money he just pulled out, that equity, was used properly? Go figure. So the biggest opportunity here from a realtors conference that I attended says the lack of insight around home equity presents a huge opportunity for us real estate professionals who are always looking for touch points with our past clients. You know, here in January alone, I have spent a huge amount of time talking to my past clients, my active clients, anyone that's doing business with about their home worth, knowing how much they owe on their home, that gives them equity. You know, all of these things have to do with equity. You may have different needs that you need to move up. You need different needs to move downsize. This conversation about equity and how to use this equity is huge right now. Now, CoreLogic's Q3 homeowner equity report. This is an interesting slide right here. CoreLogic's third quarter home equity showed that the average homeowner with a mortgage gained in equity $57,000. You know, I get in that piece alone, the equity piece, just on that. $50,000 as of the third quarter. Those being the latest numbers we have. This is the average growth in equity in a home. Now, you know, there's so many people that listen from so many different parts of the country to the monthly market report. Here on the West Coast or somewhere like that, it's probably a multiple of that number. If you're in the middle of the country, maybe it's that. Maybe it's a little bit more, depending on where you are. But 57,000 last year, that's a shocking number to so many people. I need to get out there with you folks that are thinking about doing something with that 50,000. 31%, 31.1, that's the year over year percentage for increase in equity in the U.S. homes with mortgages. 3.2 trillion, that's the rise in equity. They go on to say this summer, home price growth reached its highest level in more than 45 years, pushing equity gains to another record high. So equity, no doubt, the shining star of the pandemic. You know, the story continues. We talked about the pandemic in 2020, how equity was allowing people to do things that maybe they weren't, that were in trouble, that they didn't have during the housing crisis. And this definitely continues on and on. Equity is just king right now. And we need to determine what we're going to do with that equity. And we're going to continue to have that discussion. Bear with me. So, you know, if we look across the country, this 57,000 in average gain, you see, depending on the state you're in. Maybe it's high in California. In California, it's 119,000. Think about that. Somewhere in the middle of the country, it's anywhere between 22 to 24,000 in gain of a price of a home. It's a really good thing for homeowners. Another report came out a couple of months ago saying that in every major city, listen to this, every major city, it was cheaper to buy a home than to rent when you consider the equity growth right now. Every major city. And so that's something we need to be talking about right now. Rents have been skyrocketing. Certainly home equity is the benefit of owning a home that many people should enjoy versus renting. Going to this, Frank Martell at CoreLogic said, not only have equity gains helped owners more seamlessly transition out of forbearance and avoid a distress sale, but they've also enabled them to continue building wealth. You heard me. The ability to build wealth through equity is one of the greatest benefits of home ownership. We know there's a ton of non-financial benefits of home ownership. We talked about those extensively. You know, how home has grown in many people's hearts and minds as we've gone through this pandemic, the staycation dynamic. No doubt the financial benefit of building wealth, though, is a huge opportunity in home ownership. Odetta Cushy goes on to say, she's a deputy chief economist for First American, U.S. households owned $36.8 trillion in owner-occupied real estate, 11.5 trillion in debt, and the remaining 25 trillion in equity. In inflated adjusted terms, homeowners had an average of 294,000 in equity Q3 2021. That's a historic high. It's unreal. The story on equity right now across the country in real estate is unreal. Now it's going to be different in different parts of the country. I'm not debating that, but no doubt the biggest opportunity I have is to connect homeowners with the equity they have. Define that for them. And many of them, they're asking for help to make wise decisions. And certainly many are wondering, okay, should we do something now? You know, I talked last month in the monthly market report, go back and get it if you didn't see it, about the pent-up selling demand that we believe is out there based on tenure and what we've seen over the last 10 years. I do believe a lot of people are considering selling the home and want to do it safely. They want to do it in the right timing. And my job as an educator is to pretty much kind of guide you, give you those basics that will let you know whether it's the right time and how to do it. And by the way, do it safely, because that's one of the steps that they want to do is how do we do this safely with this kind of environment. Now, in our last portion here in the monthly market report for January is what to expect for this year's real estate market. Uncertainty right now, I think, kills your potential real estate opportunities. Certainty helps you move forward. Two things that are important about certainty: being educated and getting the message out. So my goal is to give you these resources to help you make wise, prudent, and profitable real estate decisions. I would ask you folks to share this information with other folks who need certainty, you know, on Facebook and other places, LinkedIn, wherever it's at. So many of you can help put this message out there. And it's so encouraging and so needful in creating the certainty in the minds of buyers and sellers across the country. So let's start off with that for a moment. Mortgage rate projections. First of all, what to expect on mortgage rate projections. You can see here from Fannie, Freddie, NAR, MBA, what they're saying about 2022 broken down by quarter. Q1, 2, 3, and 4, the average there. I'm not here to tell you that this is where interest rates are going to be. I'm not here to tell you that because I believe that's a fool's game. I'm going to always look at what the experts are saying, and I'm going to give you an expert opinion on this. What are they saying right now? Somewhere between 3 and 3.5% and 4% in the second half of the year. We are seeing volatility even this week, seeing rates jump up. I just saw the average 30-year fix go to 3.2. In 30 years, believe it or not, of doing loans also, I have never seen lower rates like this. So, you know, that's going to continue to go up and up and down over the next, 6 months or so. But I do believe we are in an upward trend. But as I talked about this several months ago, we're going back to where we were. The last 10 years, we've been between 3 and 5% in the average of 30-year fix. Still great financing terms. Great financing for any home. That's what you can expect. That's how you can create certainty in your mind as a seller or buyer, whether when purchasing or selling your real estate. Okay? Forbearances, the other angle, have finally fallen below 1 million. This going into this year, I believe, is going to be a non-issue, a non-message. I don't think you're going to hear much about it, but I want to educate you on it anyway. Just under 1 million, about 890,000 mortgages actively in forbearance. That represents about 1.6% of active mortgages. You know, we've covered this extensively on what's happening to those people that are coming out of forbearance. If you remember the circle graph that we used many times in the past, I can tell you those numbers are still in those parameters. I didn't bring them today, but 4 out of 5 that are coming out of forbearance are coming out either having gone through a great workout for paying off their payments. There are people that still need to do that, but it's a very small fraction. And oh, by the way, we just talked about it. Their homes have appreciated on an average $57,000 in the last year. So they have opportunities. I still think we need to have the conversation and talk about it. I still think we need to be available for folks. I'll be available if you need me to kind of guide you in that direction. But this going into 2022 will be a non-issue. And I believe something that we continue to hear less and less about. McClare Bolton Smith from CoreLogic says this: we may see a little bit of an uptick in the foreclosure rate in 2022. Just an uptick, though, from an extraordinary low level. We're not expecting to see big increases. Listen to this. We expect delinquency rates overall on home mortgages to actually continue to remain quite low. What's going to happen with foreclosures this year? According to CoreLogic, remain quite low. That's a line you're going to use in a lot of places. I think they're going to be quite low. Can I kill that anymore? No. That's what CoreLogic said. I think we're going to see that again to be a non-issue because there are options for many homeowners. I don't see banks being in a posture to try to foreclose on people. I think they're trying to work whatever out they can, and the numbers just aren't there like in the last housing crisis. I mean, that was completely upside down. Now, the other question is what is going to happen with prices? We've talked a lot about pricing over the last several months, And the fact is, we've seen unbelievable pricing in this country. Okay, unbelievable. And this is the question. Has pricing peaked? I'm using this graphic here to show FHA CoreLogic and Case-Shillers. This is a look going back to January of 2021, all the way through October and November of this last year of pricing. So let me break this down for you because the title here is, has home appreciation acceleration peaked? Question mark. So start out in January. The funny thing about this graphic is we're starting out at 10%. We're starting out at a historical high appreciation. And where, you know, it continues to rise each month. So this is a measure of year over year. So what each one of these organizations does in January of this past year is they took January of 2021, compared it to January 2020, and asked yourself and determined what did prices grow by. And we know that in 2020, they grew by 10%. And then each month as it goes on. Now we said prices appear to look like they've peaked. And they do. But here's the question. Have they peaked or have they plateaued? I sort of want to put that question on the table because that's what folks are looking at right now and saying, okay, what is happening with prices? And experts are wondering this as well. Let me be very, very clear about that. But no doubt, I think there's been a peak. But is it a plateau that we're about to see? I'll tell you this. I don't think we're going to go see prices or appreciation drop from 18, 19% down to 5%. Now, I'm going to show you what forecasters are saying in just a minute. The average is about 5%, but I don't think you're going to go from 18% appreciation to 5% appreciation overnight or in a year. No doubt appreciation is still very, very strong in the market, and we expect appreciation to continue in 2022. And if you look at those forecasting appreciation right now for 2022, they're saying that the average is about 5.2%. I just mentioned that. Anywhere from 7.5 to 2.8. Here's one thing I see about forecasters right now. They're already starting to up-level their forecast. I think this average here of 5.2 is low. I think they're going to go above that. But how much that? I certainly don't know, and it's anyone's guess. But I think we're going to see more than 5% appreciation in real estate in 2022. Now, and always remember though, as appreciations go down in this graphic, that's not depreciation. Let me say that again. As appreciation goes down in this graphic, that's not depreciation. It's just less appreciation. And always remember, month over month, year over year, appreciation is cumulative. I want to explain that very, very well because in the graphic, people can miss that. They can go, I missed the hump. No, you didn't miss it. You didn't miss anything. We're just seeing less appreciation than what we saw last year. You know, the word that's often used is deceleration in appreciation, which means it's coming at a slower rate. Think about a car going down the road decelerating. Still moving very fast, just not as fast as you were moments ago. The average from forecasters of 5.2%. You know, I think as we look at interest rates, we look at forbearances, we look at prices, we look at all things happening, the bottom line again from CoreLogic's McClare Bolton Smith says is, overall, I do think that 2022 will be another strong year for housing, albeit a little bit higher mortgage rates. And we do think home sales will continue to rise and actually reach a 16-year high in 2022. So no doubt across the country, we're seeing a lot of things happening in real estate. We need more inventory. Buyers are in full force, but overall it looks like a very, very good real estate market coming up in 2022. You know, as I stop sharing my screen here, I just want to wrap up our time and wish you a happy new year. Wish you a great 2022. I'm grateful for your support and you taking the time to watch the monthly market report for January of 2022 and allow me to educate and advise in the best way possible. Knowing that, I appreciate that. I really value that and hope you have a wonderful year. I'll see you back in February. Do me a favor, if this has been of any help to you or educational to some degree or another, give me a thumbs up, thumbs down, smiley faces, all the emojis that you can find down there. And again, reach out to me down below if you're looking for a just an idea of what your property can sell right now in San Clemente or in the South Orange County area. Give me a call, set up an appointment. It takes me less than 10 or 15 minutes to figure that out for you and share with you those numbers. Alrighty, and then if you know of anyone who's thinking about selling, please let me know, guys. We are desperate for inventory, as you can tell, as I told you throughout this whole 20 last minutes or so. By the way, I leave you with this always. Put love in front of everything you do. If you do, you'll never work a day in your life. You think I'm working? Nope. I'm having too much fun. All right, guys, you all have a great day. God bless you all. Take care. See you in February.